when CoreWeave was going public, it was having a hard time getting a good pricing. And then Nvidia kicked in and said, we're going to be a part of this particular IPO. And I think what's happening here is this. Nvidia is creating the chips, and CoreWeave is helping them sell the computing using those chips to different public that's out there. Now, at this time, CoreWeave has a massive backlog of orders, but it needs to get funding done in order to convert that into data centers and then capacity. Now, Nvidia isn't giving them money straight away, but it's basically saying, we have confidence in this company, and it would help. Then CoreWeave go out and raise capital from outside. So I think it's a little bit more like spreading the Nvidia ecosystem is what's happening right now.
Looking at your research note, you note that CoreWeave has $50 billion in remaining performance obligations. What does that mean?
Yeah, basically it says this is kind of the contracted revenue they have on hand, which means, Microsoft has said, what, I'm good for 10 out of that, for example. Meta has a deal with them. So they have this backlog of all these orders. But, unlike other companies, you just can't go out and fulfill the demand. You have to create a very large data centers using NVIDIA chips. It then starts to work out or runs, and then you realize that 50 billion into revenue over the next several years.
So what's the gating issue here for CoreWeave? Is it more access to more data centers? What's kind of the gating issue for them to fulfill that revenue?
There are multiple gating factors. One is actually the data center itself. For that, you need land, you need power. The chip side is okay at this point because NVIDIA is there, but then also you need capital. I mean, CoreWeave is not a company like Microsoft or Amazon that has unlimited capital to create these data centers. It has to go in the market and raise capital. Before they went public, their cost of capital was north of 10%. Right now, after they went public, the cost of capital has gone down to about 8%. But the entire neoclouds arena, whether it is CoreWeave or whether it is Nebius, really depends on private credit lending or lending by other banks to really come up with the funding to create these data centers.
So I also see in the news here today that Microsoft unveils latest AI chip to reduce reliance on NVIDIA. What's going on there?
So this is something that's going on with all hyperscale cloud providers, whether that's Google with its TPUs, Amazon with its chip, and now Microsoft launching. They have one chip, but the first generation was not, you could say, did not do that well in terms of, reception from customers. What Microsoft is hoping here right now is, for training, they'll still use the more powerful NVIDIA chips. But for, running, let's say, a Copilot, they could get around and use less powerful chips, and if they do that, they actually save a lot of money. In our math, we think if Microsoft is going to spend, somewhere north of $140 billion this year, more than 50 of that is going to go just buying chips. And so, it's a very big ticket for them, and everybody needs to be doing this, frankly, in-house.
So what's the next thing we should be looking for? We got earnings coming up this week. Anurag, just give us a little preview of kind of what you think the market's keying on this time around.
The biggest thing we want to know is where are the use cases? What kind of AI adoption we are seeing across different sectors? And that's, I think, is going to probably be the most important thing for us. We have already seen that infrastructure spending is very high. Everybody has that big AI factory in place, but is the demand coming from non-LLM customers to deploy those? And that's really, I think, one of the biggest focus areas for us going into this earnings season and probably all of 2026.
So what do you think is the best positioned of kind of the big tech names that you follow for 2026 here? Because there's probably as much concern in the marketplace that this could be a year where the AI story begins to disappoint, perhaps.
Yeah, if you think about it, the three companies that are probably better positioned than the others are really Microsoft, Google, and Amazon. Because not only do they have an emerging AI infrastructure business, but they also have a legacy cloud business. And one of the ways you deploy this technology is using cloud. So if you're building an application using one of the LLMs, you're hosting it in one of these cloud providers. And we've already seen that an improvement in growth rates for Microsoft and Google. And I think this year we see that improvement coming in for Amazon as well.